Well, well, well. We're back, ladies and gentlemen. Yes, we are. What a journey it has been. It has been a very interesting journey, to say the least, through all the madness of cryptocurrency and all the stories that we're seeing that are hitting the US right now. We've got a big day today, you know. FOMC minutes are going to be released. That's going to be something that you guys have to be very careful about. But we'll talk about that in a few moments. But anyways, the bold man is back. Yes, we are back. Yes. Good afternoon. Welcome, welcome. Listen, man, we're back to it, ladies and gentlemen. So I only got off the flight, 10 o'clock this morning, UK time. So yeah, I'm pretty spaced out, jet lagged to the best of any degree. But who cares? We're here. We're going to deliver. We've got a lot to talk about. We've got loads to dive into today. Lots of things have been happening, but let's get with the program. So is Bitcoin done yet? I mean, let's be honest now. So many people are adamant that this is it for cryptocurrency. Bitcoin's made its high now. It's done. No more Bitcoin price movement to the upside. Have you got a reason to believe that Bitcoin's going to go down? That's the question. Is there anything that's giving you a reason to believe that Bitcoin should be going down? Because the idea of the stock market going down, well, that logic was done a long time ago and it just completely dismissed it. So we don't need to worry about the stock market. AI is fueling all of these moves to the upside because we're not talking about chump change right now. We're talking about multi-billion-dollar deals coming into play with AI. All right? And it's not small change. This is big money that can only filter into what? The earnings per share for every investor who buys a share in that company. I mean, look at OpenAI and AMD. And apparently, Jensen didn't know too much about that. He was first, he didn't really hear anything about it until it was announced, which is a little bit wild, to be fair, given that you're in one of the heavyweights in the game of AI. But it's clear as day that AI is actually running the show. And anything that goes wrong in AI, then AI is going to react. That's why they're calling it the dot-com bubble era yet again. So you just got to be very careful. But anyways, today's live stream, I'm going to break it all down because we've had some very interesting things. Prophecies have been coming into action, ladies and gentlemen. And if you've been following me for a little while, you know what I've been talking about. Only last week, not last week, but the week before that, when we were talking about the importance of an ETF. And why I said to you that the ETFs in cryptocurrency right now, Bitcoin, Ethereum, and the pending ones of Solana, and even whatever XRP is, they're not giving investors realistically the wants that they need in terms of an ETF. It needs to appeal to Wall Street. It needs to appeal to the mainstream investor for him to really exercise an ETF the way it should be exercised. So I'm going to be diving into that and giving you some insight on that. Circle's done well. Bullish has just done something fantastic. I'm telling you. These companies, there's a reason why they're getting their IPOs and they're coming onto the stock market, because these are all relationships that are all going to evolve. But we're going to talk about that in a few seconds, ladies and gentlemen. I just wanted to welcome you all back. Can you look at Hilbert Group? Yeah, I'll have a look at it. Oracle, Nvidia drama. So yes, Oracle has come around and said that the margins are a little bit high because all this money that's being spent in AI right now, it's got investors thinking, okay, cool, the money's there to be spent, but we're only spending it to develop the product. Is the consumer there on the other side? And that consumer could be a business. Anyways, let's get with the program, ladies and gentlemen, understand exactly what's been going on. Glad to be back, guys. Glad to be back. Here we go. If the market hates, here we go. Cows has said, if the market hate unpredictable things, then would they break Bitcoin's 4-year predictable cycle? Listen, your Bitcoin cycle fundamentally, okay, is broken until it's not. All right. And that is the truth, ladies and gentlemen. You know, it's when does it stop working? That's the question. Let me just, what the hell is this? This is a little bit crazy. Anyway, yeah, it's broken until it's not. All right. So in my opinion, there's too much happening in the space of cryptocurrency to advertise to Wall Street to get involved in it. All right. Look at these headlines. $16 trillion surge. Right. It's all being fueled by AI, right? Now, before we start talking about the fact that bonds had a great run yesterday because the Treasury saw a nice bit of interest, that's good news, but bad news at the same time, okay? Because if investors are now going to start pulling into the bonds and demanding bonds, it means, good thing, it means that investors are effectively looking at it saying, okay, if the interest rates are really going to be coming down, well, we better get in some bond lockage. We better get some yield locked in. All right. So if the bonds are going up, yesterday, stock market pulled back aggressively, then you can only assume that investors are now going to start taking some profits, consolidate, and of course, get ready to prepare themselves for the next bout of risk. Going into the article, it just says that artificial intelligence has done it. It's AI. AI is fueling it completely. It says here that there is a story that tech giants dragged down the index amid a report that Oracle Corp's cloud margins are lower than many estimate. That's a little bit of a problem. If we're not getting the truth about where we are with these companies' earnings, okay, then we're going to have ourselves a little bit of an interesting story. What is going on with this? Let me just change something. Horizontal. There we go. That should work. Happy days. Cool. Is everything all right on the live? This is obviously always, whenever I come back, there's always teething issues. Okay. Yeah, Silver's doing interesting. Yeah, we'll talk about that in a second. Anyways, so yeah, and the thing is, right, we've got this problem now that investors, as it says here, investor optimism has grown heated in recent months, with many investors seeming too busy chasing the upside to worry about risks like US government shutdown and stretched valuations. What valuations, you say? Valuations like this. Stock bond ratio, we're returning back to this, ladies and gentlemen. What does it tell you? It tells you if stocks are overvalued in relation to the bonds. And that's exactly what you've got over here. But one metric that we do need to take into consideration, which has been consistent with market turns. Check this out. In front of you is the margin. The S&P FINRA margin balance ratios. Let's just expand this out, okay? This effectively tells you how much margin are people taking on and plowing it into the stock market, all right? Taking on risk. If you look at this over historically, you then start to understand that sometimes it repeats, okay? I know gold is unstoppable. Why do you think? And I'm going to explain why gold is unstoppable very shortly. I've got lots to give you today, ladies and gentlemen. Lots. So make sure you're sticking around. You want to know about Bitcoin? You want to know about stocks as well? I've got some flavor for you today. So make sure you stick around for it. Look at these levels here. See that? 0.4, 0.4 again, 0.4. All right? This is the margin balance. Every time we see it hit the 0.4 region, we get a little bit of a corrective move in the stock market. Look what it went to before. Went to 0.42. And the stock market corrected pretty badly from that point. Okay? That tells you the S&P 500 divided by currency in circulation tells you everything is so overvalued right now. Too much margin is being picked up by investors. It is now currently trading at 0.44. They're borrowing a lot of money to do this at the rates that we've got now. So you can appreciate that when the market does actually get the rate cuts themselves, there's going to be free money available. Not free money, but it's going to be a little bit more expensive. These guys are going to be so exhausted, they're going to have to really consolidate across the board. This is a big chart. Massive. Let's just add it to it. Like it's very interesting when you start to really put it into perspective on what you can get from it. So if I just add this, put the S&P 500, you usually see some very interesting behavior. Okay, there you go. So we enlarge it. So you can see the S&P is the yellow. This red line, which is the margin balance, peaks out before the S&P does. That's what you're seeing over here. It peaks out. That starts to come down. People start taking off margin. Then the stock market drops. All right. So look, we're going into a very interesting time right now. Historically, it's corrected at the 0.4%. We had this mad anomaly up here. Okay. But the market didn't drop. But that was a subprime mortgage crisis. That was when they were really badly in margin. And then the subprime mortgage crisis came into play and the stock market just collapsed from that point. What was going up at that time? Oil. What was going up at that time? Gold. What was going up in that time? Commodities. Because investors were scared. Bang. Then everything decides to come down because they hedged themselves. All right. This is a very important chart, so make sure you're fully aware of that. Going into the sentiment, seasonality, October is where it's at. Cryptocurrency has demonstrated that magnificently. What are we on now? We're on the 8th of October. Technically, the 8th of October should be an up day, ladies and gentlemen. We should be trading positive based on the last 30 years of the S&P Oh, the SPX performance day of the month. It says here that in the month of October, usually on the 8th, we should see a green day. Not that much of a big day, but we should see a green day. That's what this is saying. Now, this is where it gets very interesting, ladies and gentlemen. Let's break it down. NASDAQ. What a despicable move to the downside yesterday on NASDAQ. Absolutely wild. Unbelievable. We'll be talking about those setups very, very shortly. Now, let's get into it. Bitcoin. Bitcoin. First pull back to the 50 EMA on the 4-hour time frame, and it's done a good job of coming away from that point. Now, let me explain to you why it may not be done just yet. Hear me out, because everyone expects Bitcoin to pull back once it hits an all-time high and go short. Well, it's evident right here that when they thought that Bitcoin hitting the all-time high over here, that it was not a time, now's the time to go short. It came back down again, and then they trapped the shorts, and then they came straight back up and ripped it to the upside and shook out those traders. Okay, cool. Now it's come back down quite aggressively, but found support. The only logical thing is that we can anticipate, Bitcoin's more than likely going to keep on marking higher. But what's going to fuel Bitcoin's move to the upside, ladies and gentlemen? Firstly, your calendar. Check this out. Today, we have we have the FOMC minutes coming out today. Where is it? Come on, give me my flavor. Here we go. So we have the FOMC minutes coming out at 7 p.m. UK time, 2 p.m. Eastern Standard. The market might consolidate a little bit, but we've got Bank of Japan Governor Ueda speaking, and the only reason he's speaking is because we've got a bit of a problem with the Japanese bonds. Check this out. Go over to the yields. You can see the yields of this is bad news for the Japanese. This is terrible news for the Japanese. They can't sustain these yields. And the only reason is because investors don't trust what's going on economically with the government of Japan and their funding. They're not trusting it. That's why they're demanding higher rates of return. So where does that mean they're going? It means they're going to other asset classes. Yen is taking a nosedive to the downside. That means equally dollar is making a move higher. So they're seeking the safety of the dollar, which means that the carry-on logic is being put to the test. The carry trade. So sell your yen because it's absolutely terrible. Go and put it into your dollars, get those dollars and start running it into other assets. Okay. You've got gold going up and you've got dollar going up. How does that make sense? Well, logically, it doesn't make sense, but it does make sense because the purchasing power of dollar right now is starting to rise and people want to take advantage of that appreciation. Okay. But gold itself, $4,000, ladies and gentlemen, happy days. That was one of our setups yesterday, but we were looking for, where is it? Where's our gold price? It just didn't stop. Wanted to see a little bit of a retrace to see the continuation from the initial balance high, and it just came and cleared the 4,010 zone. It was an absolute crazy setup, but we look at it, you can see that they came in and tapped that. Came in and tapped that entry region right there on the nose to then make the recovery to the upside. It was quite outstanding from gold, and gold is going to continue to mark up, ladies and gentlemen. It's not going to stop. Okay. Why? Because we don't know where we are with the interest rates. We don't know where we are exactly on how the Fed is going to react to the current state of the economy. And we are also in a US government shutdown. That is why the bond market usually does well and gold usually does well, because of the uncertainty of investors looking at the economy thinking, oh my God, what can happen next with this shutdown? He is going to start getting rid of a lot of people and civil servants in the US government. That's going to rock a lot of people. That's going to rock a lot of people in finance, which is why they're going over to gold. Silver came through nicely. We're very close to our projection, ladies and gentlemen, $50 an ounce. Not bad. It's getting close. My next logical spot for silver is probably going to be about 55, 60, but that's going to be, of course, a blow off top, in my opinion. But there is a lot of things happening right now with gold and silver. The accumulation is just significant. They're not stopping at all. Now, let's break it down. Last week, we're getting into cryptocurrency right now, okay? Last week, before I went to Singapore, absolutely crazy world, okay? Before I went to Singapore, I started to talk to you guys about what the point of an ETF is, all right? The idea of an ETF is to effectively diversify. It's a money market for you. If you don't want to take on the risk of buying Bitcoin by itself or a stock, you go and look and see if this stock is part of an ETF. So we know tech stocks are very volatile. If you just go and put your whole life into a stock, a single tech stock, because you just like the way the company works or you like the name, okay, then you do run the risk of that stock dropping down at some bad news event. So what do? You go to an ETF and you say, I'm going to start favoring buying tech ETFs. Okay, have a look at the iShares Paris Saint-Germain one. Okay, that's perfect. It's packed with tech stocks. So you're safe there because Nvidia can be down one day, but Microsoft and Google and Amazon will be up the next. Okay, and it'll be able to offset your hedge or risk, should I say. All right? Check this out. We said it last week. S&P launches new crypto index. The digital markets 50 will give diversified exposure. I said this last week. Your Bitcoin ETF is only accessible for Wall Street as a means to be able to buy just Bitcoin. But in terms of an ETF exposure, there's nothing else in the ETF that the ETF can provide other than being able to buy Bitcoin, because legislatively, banks can't buy Bitcoin. So you get the option to buy it through an ETF. Zero purpose and function. As an ETF, it doesn't allow me to hedge myself. Because if I go into the ETF to hedge myself on Bitcoin's price falling, well, it relies on those guys holding that Bitcoin ETF. And if they do get rid of the ETF, it means they're getting rid of the Bitcoin holdings. Go and have a look at what's going on with BlackRock. BlackRock's up to something interesting. It's just hit nothing 11 hours ago. It's just doing absolutely madness on chain data. All right. But we're looking at the balance, and we are nearly at the 800,000 mark, if it hasn't been hit already, just in case this hasn't been updated. 798,747 Bitcoin ETFs stacking, absolutely stacking. So what do you think this is going to do? Check this out. It says here that the S&P Dow Jones Indices launched the S&P Digital Markets 50, a new index combining 15 cryptocurrencies and 35 crypto-related stocks. Where's your stocks, you say, Tino? Here we go, in front of you. This is a list of crypto-related stocks. You've got Bitwise Crypto Industry, Mara Holdings, Compo Secure, or companies that are related to crypto as well are in here, because you will see Spotify as well, okay? But you know the main heavyweights, Circle, Coinbase, you got Cypher Mining. What's going on with Cypher Mining, ladies and gentlemen? They just had that big little jump with Google itself. Where is it? Hold on. Cypher Mining, there you go, got into bed with Google. All right, so they're doing something, and you can see their stock is doing absolutely wonderful. And what have we been talking about the last couple of weeks? We've been talking about Circle, and Circle got into bed with Deutsche Börse, so they're going to be doing business. Now we've just seen this story here. Where is it? Come on, where is my article? There we go. Deutsche Bank goes bullish. So DB Partners with the NYSE listed bullish to offer banking for its crypto platform. I've been giving you these stocks to prepare yourself. I've been buying that. I mean, on the Circle trade that I've got over here. Here we go. My bullish stock right now. I'm in drawdown on it because it's just stuck inside of this, but we did see a little bit of flavor in that. But in my Circle trade, we're doing all right now. Nearly $1,200, well, $1,129 in profit. But I'm obviously playing this for a little while right now, okay? So I can appreciate that at the open. If it's not true, BLSH, on the back of that good news, we should be seeing bullish gapping up. Nothing yet. Nothing yet. They're not, yeah, it's not actively happening just, oh, it has actually gapped up ever so slightly on bullish. But when we go into the pre-markets, it's probably going to be down just a little bit. Where is it? Here we go. What's going on there? Here we go. Yeah, so, oh, it's up 0.92%. Okay, it's $65.70. So if I just go back to my position, $65.70. So that puts me up here just ever so slightly, just below my entry. So I'm going to be making a little bit of a return on that. And this is where I'm buying the tokenized stocks, ladies and gentlemen. Tokenized stocks on BTCC, and there's a list of them. You can buy Mara, you can buy Circle, you can buy Coinbase, you can buy gold, but where you want to trade tokenized stocks, you get them on BTCC. So I've got that pinned to the top of the chat if you want to go check those guys out, BTCC. And you can then start buying tokenized stocks and trade crypto and trade Forex all at the same time. So whatever happens with these positions, what you're going to see me doing is getting into a little bit of crypto if I need to, or trade NASDAQ on a specific day to alleviate any of the loss and what have you. But I'm expecting bullish to absolutely explode to the upside, especially with this story about the old, where is it? Where's my, where I just had it a second ago. Where is that? That story there. There it is. This right here is absolutely huge. I'm telling you, any cryptocurrency-based company that's getting listed on an IPO, there's going to be partnerships involved later on. And that's what I've been banging on about. Now, this story here with the ETFs is massive. Now Wall Street has a reason to believe to get into crypto. So instead of buying Bitcoin individually or Ethereum individually, you can now trade the whole thing here. You want your altcoins, you want to understand the differences between the altcoin market season and Bitcoin season. That right there, or the digital markets 50, will be the go-to. It really will be the go-to because that's where Wall Street's going to park their money. That's where I think it's going to be ending up, ladies and gentlemen. And it's going to be an ETF that tells you what the story is. So you've got Bitcoin ETF and you're also going to have Bitcoin involved in that. Okay. So there's going to be accumulation both ways. If it's synthetic, that's a problem. If it's synthetic, it's a problem. Because it means that it's based on the price changes of the following assets. So it's going to be very important when we find out exactly how it's going to work. It says here that the index developed with Denari aims to provide diversified exposure to digital assets and will be available in Denari's D-Shares platform. No single asset will exceed 5% of the index. New equities require 100 million market cap. There you go. And new cryptocurrencies need 300 million market cap. So say goodbye to your shit coins. Yeah. If you're trying to understand which altcoins to be holding on to, right? That's going to tell you which one. If it's not altcoins, it's going to be crypto stocks. You want a list of crypto stocks? I've got them right there for you. Lists. There you go. Right there. These are all cryptocurrency-based stocks. Wall Street's not going to go to a cryptocurrency company that's not listed on the US stock market. Some of them do, but Wall Street won't. All right? Cypher mining, it's on the US stock market. That's why Google's got into bed with it. You're going to have to change the way you approach the altcoin story. They're not going to look at altcoins that are less than 100 million and 300 million in market cap. So that eliminates you having to focus on any altcoins that you are hoping to shoot to the moon. Then you might get that, who knows? But as a long-term play, this thing right here is really going to give people a lot of flexibility and truth to understand whether or not your portfolio, if your portfolio is not made up of any of the stocks that they put inside of here or the cryptocurrency coins, because they're only giving us 15. What 15 could it be? Well, we know Bitcoin, Ethereum, Solana, BNB is up there. All right. Chainlink, maybe. All right. DOT, maybe. Mainly all utility coins. DeFi coins with big volume on there. That is what a true ETF is going to evolve into. It has to be based off the development and the exposure of various assets. That's the problem with the current cryptocurrency ETF of Bitcoin. It's just based on Bitcoin. So you do run a bit of a problem. Saying that, got this story over here. Look at this. Largest union federation opposes crypto bill, says it exposes workers' retirement funds to risk. So basically Donald Trump's trying to get access to $12.7 trillion to crypto, basically. That's what he's trying to do. And the problem is they're now starting to buck up and say, hold on a second, that does pose a little bit of a risk. Frankly, it does because of the fluctuations. We need Bitcoin's price to be significantly higher for the idea that it's not going to be risky, because Bitcoin will get to such a price point that it won't barely move. You know, there are people that believe that Bitcoin should be in the millions. And if Bitcoin gets up to becoming in the millions, then only a few heavyweights are going to be able to move the price. Okay? That for me says that the higher Bitcoin goes, the more, or should I say, the less risk it becomes. That's what I believe. It needs to be so expensive that it's going to be a little while before Bitcoin really takes a nosedive. I mean, just look at Berkshire Hathaway stock. There's barely any drawdowns or big, large fluctuations unless there's major news announcements or anything like that, but nothing to be too concerned about, in my opinion. So I believe that Bitcoin realistically needs to be more and more expensive to eliminate the idea of risk or volatility. Because right now, at the price that it's at, it's absolutely shocking. Bitcoin itself has just been moving up and down, up. This is too volatile. And that's why Vanguard said that we're not going to apply and put through a Bitcoin ETF. And now they've retracted on that. And I called that out. I did call it out and said that Vanguard's clients are going to be seeing that all the other clients who are with BlackRock and Fidelity, they're going to be saying, look at the gains that I've made on this ETF. And they're going to be looking at Vanguard saying, hold on, I give you my money. And you're like, your philosophy is you don't like it. I'm missing out on opportunities to make income here. Pull my liquidity, please. That's big customer number one, big customer number two, big customer number three. Vanguard now all of a sudden shows favor to Bitcoin. When the ETF came out, it didn't. Just go and look at the Bitcoin ETF the day it came out, January the 12th, 2024. All right, go and look at what it did. And then go and have a look at the articles surrounding that area. I spoke about it, saying that Vanguard said it doesn't align with their philosophy. What a joke. Well, now it does. So Interesting. Anyways, quickly breaking down a little bit of price action and why Bitcoin ain't done yet. So basically, I've given you the idea that we've got lots of data coming out suggesting that things are looking good for crypto. You've got this article right here. You've got this story right here. And then you've got this story right here. Crypto trader turned 3.5K into 7.9 million. As I said, Solana, you know, when that goes up, okay, it means there's meme activity, meme coins. This was done on Binance. All right. So that's why Binance is currently trading at a wild price. Look at that, man. $1,300, man. Jeez. You're laughing with your BNB. You really are laughing with it. So anyone that's staking right now with BNB, boy, go check your farms out. Check your farms if you've been stacking that, well, using a lot of BNB to yield. So that's very interesting. Anyways, back into Bitcoin. So yeah, the idea is that you've got lots of things happening with cryptocurrency and inside cryptocurrency and outside cryptocurrency, but still inside of it. In other words, cryptocurrency related stocks. All right. That is massive. Do you understand what endorsement that is? All right. For cryptocurrency based stocks, Deutsche Bank goes bullish to offer corporate banking for its crypto platform. That means what? Well, Deutsche Bank customers are only going to be buying cryptocurrency through the utility of bullish. Happy days. So it's gonna... Never mind. NASDAQ doing some interesting things. Here we go. Let's go and have a look at NASDAQ. Bitcoin should be doing the same thing too. NASDAQ, where are you? Oh, NASDAQ's waking up a little bit. Yeah, so that's good news right there. So that means we've had quite a few stocks opening up. Jensen was speaking just only shortly, just a few moments ago. He was speaking, and that's kind of given NVIDIA a nice little gap up play right there. This thing is just not stopping. $200, man. $200 is coming up. Let's just quickly have a look at where we are with bullish. Has bullish done anything good right now? It is open right now. Let's just have a look at our positions. Where we are? No, it hasn't done anything right there, but Circle is okay. We're cool with Circle. Yeah, just wait for the market to really just come to its senses. Tesla currently trading like so. What's gold doing? Gold's just not going to stop going up, ladies and gentlemen. Quickly going to NASDAQ, getting ready for that red vector candle recovery. So that's good news right there. Going into the yen, understand? Yeah, yen's going to keep going. But the problem that I've got is the volatility index itself is still showing complacency, but you do have the FOMC minutes coming out later on, so just be very careful with that. Be very careful. Quickly going into Bitcoin. Okay, so do you remember this chart, the open interest? And remember when I was screaming to you all saying that Bitcoin will recover that red vector candle zone? Do you remember that? On the 4 hour, on the daily time frame, where is it? Let's just go back and have a look at that. There you go. I said to you all that Bitcoin will recover this point, all right? And the chances of it recovering at that point are massive if it breaks 117. Well, there was your 117 breakout, blue vector candle, break into that range sweep, vector recovery. Everyone was shitting the bed when this was happening, guys. They were saying, that's it, it's done, it's done, it's done. Everyone always says it's done. Now, some of you might be like, oh, Tina's bullish, let's go short. Cool, go short, okay? Be my guest, go short, because you're only going to get squeezed out, because the narrative across the board is we are going into cheaper rates. So that means I can borrow more dollars and buy myself more Bitcoin. Now, you might be successful because Bitcoin could easily pull back right now and trade back into the blue vector candle. You've made yourself some money. Don't try and prove to me whether I'm right or wrong. Try and just get yourself some money out of this game as fast as you physically can. That's what you've got to do. Don't do it to say, oh, Tina. Don't do it, all right? If you can make money on it, take what you can and run. And then come back to it again and just play the game of keep going, running back and forth and what have you, all right? Looking at where we are right now, though, going into the high block, you can see that we have just smacked out this area of open interest, which was a significant area of open interest before that we were looking at, all right? Now, this is where you got to pay attention. Open interest is massive down here at 120,000. It seems like the floor is around 120, and price is doing its best to try and come away from this 120,000, 121,000 region itself, okay? But because you've got the FOMC minutes coming out, and you've got, of course, after that, Bank of Japan Governor Ueda speaking, if he turns around tonight and says, we might actually have to increase the yields on our interest rates because 1.7% on the 10-year yen, that is no good for them. That really does hurt the GDP, okay? And it's not going to serve them given that they do have a problem with inflation anyway, all right? So we need to be sure that he says tonight, yeah, we're not worried about anything. We're going to keep interest rates the same because if they do decide to increase the interest rates, you're going to get the carry trade unwind and everything that you're seeing to the upside is going to collapse, all right? They did it last time, 31st of July. They said we're going to increase the interest rates. They increased the interest rates on that day, 31st of July, 2024. 5th of August, 2024, stock markets crashed and then they came straight back up again. So we could be in for a little bit of a crash, who knows? But we're not, look, unemployment claims. We don't know if we're going to get the data or not because of the US government shutdown. It says it here, US government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation. Basically, we don't know what we're dealing with. So the market says, yes, please, let's just buy, which is kind of irresponsible because this is going somewhere. This isn't good. But with that being said, just quickly breaking it down, we've got the key area of interest up here, like the test of this 121,000. Question is, ladies and gentlemen, how many of you are buying spot right now? How many of you are in spot positions? Give me your flavor. How many of you are in spot? Tina, what's your forecast for 2026 across the board? Well, we don't know where we are with, would you get bullish? Oh, right. We don't know where we are with the interest rates. The closer we are with interest rates, the better. Look, interest rates right now, 94.6%. That's what they're expecting. Okay, they're expecting 94.6. That's for the rate cut for 3.75, 4%. But they're just doing that now. We don't know anything. And the worst thing is they're basing it off the idea of the information that they've had before. We know nothing. We could come into the data coming into the next week or the week after. We got inflation data next week. But it all depends on how long the US government decides to stay shut for. It might come to an end this weekend. We don't know. But as long as the US government stays shut, you're going to see assets appreciate. That's it. You're all going to see assets appreciate. Be careful. Be careful when you're running be careful when you're running shorts in these environments. Be very careful because the macros make sense for it. The macros say that we haven't yet had the insight to rate cuts. If the economy is actually struggling right now and the labor market is starting to contract, the Fed has to cut the rates. The market's going to love that. And the markets are going to pump up. So just be very careful. If you are trying to short Bitcoin, if you grab the short and it works, congratulations, man. Then you can come to me and be like, you said to go short, not to go short. And I did, and I made some money. Awesome. But I know you guys are looking to short Bitcoin to the depths of hell. You're not interested in a $1,500 move. You're interested in a $15, $25, $30,000 move in Bitcoin. You want to go short from here and hope Bitcoin wets the bed and goes all the way down to 92. That's the kind of short that you're looking for. But when you come to me and I say to you, don't go short at these levels because Bitcoin can easily just spike back up. You go short, it goes down $1,200. You said not to go short. I made $800 to, F you. Listen, F me, but you made money. Cool. That's what that matters at the end of the day. Trying to get you to understand the bigger picture ain't allowing Bitcoin to go down. It's not. And any retraces down, okay, are going to be met with instant reversals back up. A lot of people are saying that this is it now. You've had this dude that posted a very long time ago on the Forex Factory forums, and he said that, all-time high Bitcoin, 6th of October and what have you. Yeah, cool. But you've got too much endorsement, too much activity happening in cryptocurrency that is naturally going to progress itself over into the charts, okay? Because the fear of missing out is very real, all right? It says here from Bloomberg, where is it? Where is it? It just said it here just a second ago about investors. Here we go. Investor optimism has grown heated in recent months, with many investors seeming too busy chasing the upside to worry about risks. They're not interested in what's going on macroeconomically speaking. That's why they're plowing into the market. But the market will go where the liquidity is. But if you have that in the back of your mind, why? US government shutdown is always good news for assets. Why? Stretched valuations is always good for assets. Why? Because it means they're going to keep on going up because retail is going to fuel that and fuel that. Look, the stock bond ratio is just so significant right now. People don't care because AI is fueling it. AI is causing everything to go up. Because if a company says, I'm going to invest $100 billion to build this and to build that, what are you going to do? No, I'm not going to get involved in that. I would not want to generate more income on earnings per share. I'm not going to buy that stock. I'm not going to buy it. No, it's too risky. You say, F that. Let's go. Because that's what it is. AI rally. This AI rally is what is called the iPhone rally. That's what it's called for me. I'm calling it the iPhone rally. Why? iPhone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 15, 14, 17, 18, 19. We're on iPhone 17. What I'm trying to say is that for every week that passes, there's a new deal coming out. And that new deal is among the heavyweights. And that deal just keeps people committed in the market. Why should you take your money off stocks? Why? Especially AI ones, when every other week they're fueling it with more business. What will make this market break? We're going into lower interest rates. What's going to make the market break? Inflation seems to be stalled. What's going to make the market break? Oh, you want me to tell you? I'll tell you in tonight's video. Hit the like button and subscribe. It's good to be back, and I'll be tuning into you all later.